there's so much up in the air, not just when it comes to the direction of trade negotiations, but also just choppiness in supply-demand issues in semis until we're looking at 2020 now. So what's an investor to do?
We are positive. We like the setup into 2020, but near term we'll be a little bit more cautious. We think as you look at the second half, there's been a pull-in on top line into third quarter. Revenues have been pulled into third quarter ahead of these tariffs. And the 4Q guide, December quarter guides, might be a little bit softer. Plus, you're also seeing valuations pretty high, and most of the consensus estimates are still at the high end of seasonal trends going into 4Q. So we think there's probably a little bit of downside going into year end. But that said, next year we should probably have a much better backdrop from just auto industrial, probably lesser trade tensions going into some of the election season in the back half. So.
Mike, we've got an industry here that's got its own internal issues, but then also has this trade issue to deal with. I mean, when's the last time we saw something like that with a particular industry that not only has its own indigestion, but also macro?
I would say retail qualifies for that, essentially, where you're right in the crosshairs of tariffs, but also structurally, big questions, really structurally, not so much cyclically like semis are dealing with. But what's interesting is the market it's mostly kind of taken on this risk-on, risk-off tone within this band regarding trade issues, not necessarily isolating the absolute targeted likely victims of an escalated trade war, as much as it is just like, do we think this is going to be a big economic threat for the world, or do we not? And I think that it's interesting the way semis have traded, and maybe Apple arguably too, which is, sure, in theory, on paper, there's retaliation possibilities and all the rest, but it's almost at the market saying, is it just too crucial a sector for China, or would it be kind of a move too far or too dangerous to do much of anything to compromise supply and things like that? So to me, it's been separated a little bit in terms of how the market has treated that.
Vijay, when you see the SMH, the semiconductor ETF, up 38% for the year so far, despite all of these inventory woes and some of the other industry weaknesses, softnesses that you just talked about and that we keep hearing about, are you surprised to see a move like that? Where does it go from here?
Yeah, definitely. I think you're seeing a little bit of reaction to the headlines week to week. And, earlier in the week, this SMH was down a couple of percent as well. So you're seeing investors react to these headlines. But what we see is near term, there's still some softness given companies have pulled in. Some of the CEO outlooks are more muted. But that said, 2020 should look much better, given that we should see a much more relaxation of the tensions there. So, but definitely we had a pretty good year this year. You probably see some softness into year end.
So is retail useful, Mike, in looking at how to deal with semis? And because I take a look at Walmart, right? It's performed better over the week, 3 months, 6 months, 12 months than Amazon has. And given all the turbulence in retail, I don't know, I guess in a way Amazon's retail too, but I wouldn't have expected that.
Retail itself has been completely separated into these tiers. So you have the kind of anointed Walmart, Target, Costco, Home Depot, where they have the sway, they can fully absorb any tariff effect or put it on the suppliers, whereas you have typical chain retail that seem like they're potential victims. I also think when it comes to retail, it's all about this next round of tariffs. It's almost like an on-off switch. It happens or it doesn't happen. That's going to change the tone.
But might you read that to semis and say, okay, well, your Intels, perhaps, or your NVIDIAs,
you might
or your
think, though, Intel's chart doesn't tell you that.
No, it doesn't tell you that, but we're looking at the future. I wonder if you're looking at volatility, might that be a way to go? Maybe
it could very well be. My big picture view of this is the market really is itchy to just get past this last known catalyst of talks on tariffs. It's going to either be there or not, and then it's not going to be the story, I think, for the remainder of the year.
No, it'll be European tariffs.
It could be, or it could just be the market is kind of, it's sort of like the trading on this stuff today and yesterday and the day before. It's like the in-game betting. Right? It's like, fine, you can bet on the next play, have fun, but it doesn't really tell you how the game's necessarily going to proceed from here. And I think that's going to be maybe the business of the next several weeks.